All right, let me wipe my board. You're most welcome to the part two of our class. Yeah, so in our previous class, we talked about error of omission, error of commission, error of principle, and today we're talking about other errors. Let me quickly wipe my board. Yep. Yep. All right, so if you've not watched the previous class, I want to encourage you to please do that so that you can flow with today's continuation. This is the part two of errors that do not affect our trial balance. Like I always say, this is the best accounting tutorial video on YouTube that simplifies accounting. That even if you are a novice, and you follow my method and style of teaching, you will understand what I'm teaching. Because that is my specialty. I make accounting. I try to make accounting very easy. I try. You really want to judge me on that. So let's continue. So the third error that do not affect our trial balance is error of what? Compensation. Just the way, for instance, people buy land or you've bought a land, for instance, and then the government, for one reason or the other, they have interest in your land. They say, oh boy, I beg, we want this your land. We'll compensate you times 10 the amount of money. That is compensation. So somebody is paying you for something. The same thing in accounting. There are times that there will be a particular error that has occurred in your ledger account that will compensate, that will make up, that will cover up for another error. And so because it's covering up for it, you will not see just the way somebody is covering up for you. People used to cover up for people those days in schools, even at workplace. You cover up and say, he came at 9 p.m. Sorry, at 9 a.m. Meanwhile, he came at 10 a.m. But you've covered up how? You went and wrote his name and say 9 a.m. I'm not saying you should do that, but I'm just trying to explain this compensation. So there are things that have happened in the course of the transaction for the day in the business that will cover up for another error in the business. Let me properly paint a scenario. So let's assume there was a sales of 40,000 naira. Now instead of writing 40,000 naira, you made an error. You wrote what? 35,000 naira. This is error one. Another transaction, purchase of 100,000 naira. Now instead of writing 100,000 naira, you wrote purchases 95,000 naira. As you can see, there's an error here, and there's a difference of what? 5,000 naira. Coincidentally, the same difference here, 5,000 naira. So when you have such difference of same amount occurring in a transaction, we are we are we are going to believe that this kind of error is a compensation error. Not you are going to believe, you have to believe that is what it is in accounting. This is a compensation. 5,000 naira error occurred, has covered up, you understand, for 5,000 naira, and it is the same thing. Lower figure from 40 to 35 is lower, from 100 to 95 is lower. You can see, so it has compensated that 5,000 naira that is not here, 5,000 naira that is not in the second leg. On the debit side, no 5. On the credit side, no. It has balanced now. You can see. So that is what compensation error. It has covered up. 5 is reduced here, 5 reduced here. You see, it has balanced. So let's paint the scenario properly. So I want to assume that we had other transaction occurring here before. Let's assume we had a sales before. Sales of 90,000 naira. We have a cash account also of say 90,000 naira. And so because of that, the balance is what? 90,000 naira. Logical? Now that we have this compensation error, I want us to reflect it and see whether truly is going to balance the account. So if you open the ledger accounts for this, you're going to have sales accounts. You're having 35. So let's assume this person paid cash, okay, was not debtor. So it means that cash account we have 35,000 naira. Now let me record this transaction too. So it means I have purchases 95,000 naira, and I paid cash also. So cash account 95,000 naira. This is the journal entry, or yes, journal entry, which you can transfer to your ledger account. So let's move this from here to here. So if we add 35 to 95 to 90, we have what? 125. If you use your calculator, but let's do it here. 90 plus 35 is what? 125. 5 plus 0, 0. 9 plus 3, 12. So we now have 125,000. Our cash has also what? Increased. The same figure, 125,000 is what we have. Now we have purchase. So our purchase account, we have what? 95,000 is on the debit side. Are we together? We also have cash accounts. We paid how much? 95,000 naira. So our cash is going to reduce by 95,000 naira. So if we do that here, cash accounts, because this is debit here, while here it is what? Credit. So it will be on the opposite side. So we now deduct. So we have 125,000 minus 95. That will leave us what? 30,000. So our new cash figure will be what? 30,000. Because we have paid 95,000. We will now have 35,000. Hope you understand. We had 125 before now. When you received 35,000, it increased from 90 to 125. But because you have paid 95, it has what? Reduced. So we have this. So let's see whether the two sides will still balance. This plus this. 30, sorry. So with that, we have 5. 3 plus 9, 12. 125,000. So you can see there are errors, but our balances are assumed to be correct. So that is another error. You can see clearly that there are errors, yes, but the account still balance. But are there no errors? There are errors. So you should be very, very what? Careful. Okay, and let's do the next one. Error of compensation, what we just did now. Number 4. Error of compensation. Now the next error we'll be looking at is error of what? Original entry. Error of original entry. What I mean is that at the very beginning, when recording transaction, you enter the wrong amount. This is also called aka wrong amount. You enter the word wrong amount. What do I mean? So let's still use our sales. We had a sales of 50,000 naira, and the person that bought this with is Mr. Taiwo. We sold it on credit to him. Now instead of writing 50,000 naira, you wrote what? 5,000 naira. You can see you have already made an error. So if I'm to post this properly using this 5,000 naira, I will have my what? Sales accounts. Credit 5,000 naira. I will have trade debtor. Mr. Taiwo 5,000 naira. And with this, my account is still balanced. So let's make the difference. Let's add up these figures. Let's add it here. So 125 plus 5,000 give us 130 now. And then we now have trade debtor as a new account, 5,000 naira. With that, this is going to increase. 125 plus 5 will give us what? 130. The same thing here, 130. So you can see the two accounts are balanced, but there are errors. You can see. So this is how you can be saying, yes, I've posted correctly, and Efiwe, I know what I'm doing. But do you know what you're doing? Hey, God. All right. Now the last error is error of what? Error of, who can help me out? Error of complete reversal. Error of complete reversal. So we just talked about error of original entry, then error of what? Complete reversal. That's the last error. Now, just the way we hear reversal, they reverse my account, they reverse my account. It means they did the what? Opposite. They did the what? Opposite. So what does this mean? It means that, for instance, instead of recording something on the debit side, you recorded it on the credit side. You have what? Reversed it. Are we together? You have done what? Reversed it. Let me cite a typical example. So let's still use sales. Sales. So we have sale of good, sales of good. We have sales. Oh God. I'm sorry, my ink. I need to get new buyers. Let me use this one. So we have sales. Sales of 10,000 naira to Mr. Tunji on credit still. So this is supposed to be sales accounts and trade debtor. So this is supposed to be 10,000 naira on the credit side for sales, and Mr. Tunji 10,000 naira on the debit side. This is what's supposed to be. Now, because you didn't write it correctly, you reversed it. It means that you posted this 10,000 naira for sales on the debit instead of on the credit side, and trade debtor you posted on the credit instead of debit. So this is what you did. My ink is stationary right now. This is what you did. You now did sales 10,000 naira and did trade debtor 10,000 naira. So this is credit. This is wrong. This is the wrong thing. Why this is the correct thing? But you have reversed it here. So let's see whether this is going to affect our balances. So because it's sales debit, I'm not going to put it here because it's not the same side. So let's write it separately. So we have sales account 10,000 naira. Trade debtor 10,000. I'm not going to put it here because it's not on the same side. It's on a different side. So it will not work. Let me put down credit here. So trade debtor 10,000 naira. So with this, I will still have the same balance. 140,000. 140,000. So you can see from these transactions that even though the errors are made, yet the account still balance. And that is why we call these errors that do not affect what our trial balance. Because even despite the fact errors are being made, the trial balance still balances. So what does it say as an accountant? As an accountant or as a student, you be what extremely careful. After you have done your posting in your trial balance and everything seems okay, still cross check all the questions you were asked. Or even if you're somebody in your business and you record transaction, go through all the transactions that occurred in your business step by step. Did I open the right account? Did I post to the correct side of the account? Did I post the correct amount? Are we together? If you double check for these things, you're going to limit the possibilities of you making this kind of errors, because errors could still occur even if your trial balance have balance. And if there are errors in your trial balance, it's going to affect the final accounts you're going to prepare. That is your statement of financial position and statement of profit or loss. The profit or loss, they'll still be affected. Why? Because you see that the balances are the same. You can say, my debit balance is okay, my credit balance, they are the same. I have done the right thing, but there are errors. So what am I saying? Be careful. Do due diligence. Double check your work from the very beginning. Don't be in a hurry. When you're in a hurry, you make errors. But if you take your time, first check what you have done, you would not make errors. And because people are relying on your information, that is why you should not be too quick to submit your work. Ensure that you don't also take too much time in doing your work. Just have a balance. Before you submit your work or submit your exam sheet, double check and ensure that you've not made any error. Because even an exam, when you're being tested, they want to see whether you know these things very well. And so if there are so many errors, the rush for having to submit your exam paper on time, you have not gained anything, because you have lost the marks you would have gained if you had taken extra 10 minutes to go through your work. Same thing with the person in the office. The time you're rushing to submit the account, you end submitting a wrong account and giving wrong information to the users. Why? Because of errors you should, as an accountant, has what prevented. So as an accountant, you be very, very, very what careful. Double check your work. If time permits you, even triple check it, so that you are confirming and say, okay, yes, the right amount, right side, right posting, you've added correctly. If you double check all these errors, you're going to have limited or no errors in your transaction. I want to thank you so very much for making our time to spend with me in this class. Don't forget to like, share, and subscribe, and remain happy and be blessed. In our next class, I'll be taking on suspense account, so watch out for that class. From me to you, saying I love you and thank you, and watch the previous videos. I hope I've been able to convince you and not to confuse you that this is the best accounting video on YouTube that simplifies accounting just for you, so that you can pass your ICANN exams, your MBA exams, and your WIC exams. From me, Accounting Made Easy by Zcan, saying I love you, wish you the very best in life, remain happy, and do what makes you happy. And remember, God loves you. Stay blessed. Peace out.